Hi, I'm Dan Wilton, the CEO of First Mining Gold. First Mining Gold is a project developer with a portfolio of assets and focused on advancing our Springpole project, which is a 5 million ounce resource project that's at pre-feasibility, moving into feasibility study level, one of the largest undeveloped open pit gold projects in North America. And moving through some very critical development milestones here over the course of the next 2 years. It's a very catalyst-rich future for First Mining Gold.
It's a catalyst-rich future indeed, but it's also been a confusing past few months, and that's why I want to catch up with you. We had a sort of 15 minutes or so in November when you're at 1-to-1, which was nice to sort of see you live. And I hadn't seen you since July before that. But look, it is a confusing environment at the moment. Gold price, nice, we like it. May it continue that its slow ascent. But equities, not so much. You guys have come off a lot since we last spoke. There's some, I don't know, is there some uncertainty in the market that is affecting you? Is it the geopolitical situation? Is it where you are in the old Lassonde curve? Or are people not getting the narrative? What do you think is going on?
Listen, I think our share price performance has been, largely in line with the development sector in the gold space. In fact, as we kind of went through our compensation committee reviews at the end of the year, we were actually at the top quartile of developers for share price performance. Now, misery loves company, and we'll never mistake relative performance for great performance. But I think that's a part of it, is that in general, all of the developers have kind of been sold off. And for us, we just kind of put our heads down. We're well funded, and we keep moving forward on the fundamental value of the projects that we have. And so that's been I think where we've been a little bit hamstrung is a lot of really good work going on, technical work that just kind of getting wrapped up as we kick off our feasibility study, and a big focus on getting our environmental assessment work to the point where, this 10,000 page environmental assessment document is around the corner from the time when we should be able to drop that in with the regulators as a draft to kind of kickstart that process.
Right. Okay. So I know you're busy. Your company's always busy, and you've got the cash to be able to be busy, and hopefully being effective. Right. So there's kind of a couple of audiences I need to help with today. Your existing shareholders very kindly sent in a lot of quite interesting questions about where you're at with different components that you're working through with regards to the feasibility study, et cetera, and hopefully, maybe getting yourself in a position where you're, FID, right? But the other audience is the new audience looking in at this kind of crazy market, this precious metal market at the moment, not quite knowing who to believe, where to look, et cetera. I look at your numbers. I look at your pre-feasibility study. There's some pretty big and exciting numbers in there. Maybe, actually, why don't you remind people what they look like? Because I want to talk to you about growth.
Sure. Yeah. So the pre-feasibility study, which we put out last year, scoped a project that had an average annual production of 335,000 ounces a year for the first kind of core 9 years of the mine life. That would put it as a top 5 producing mine in Canada in any given year. So this is a big, globally significant deposit. Resources, 4.6 million ounces M&I in silver and gold, and another 20 million ounces in silver. Reserves, declared reserves with the PFS of 3.8 million ounces reserve. So this is a project that is big enough to be meaningful to the biggest gold companies in the world. Very attractive NPV, after-tax NPV at $1,600 gold, just shy of $1 billion US. Pre-tax 1.5. So, and upfront capital, 718 million US.
Right. Okay. So right, and also IRR at 1,600 gold, just under 30%. Right. So
just under 30%.
Pretty nice, right? But is it the capex figure that's perhaps scaring people? And if you think it is, then we need to kind of address it and say, well, look, think of it in the context of whatever, how you want to explain it away.
Yeah.
But first of all, do you think that is putting people off? Maybe not the funders, but the market.
I think it's one of the things that people have concern about, because they've seen developers of large projects move forward and, end up with, you get it to the final investment decision stage, and you've got this big funding overhang. Well, the reality is, I think the way that we look at it is, there's an enormous amount of risk that we take out of this business in the next 2 years, just doing what we have the team and the capital to do, which is take it through feasibility, and take it through the environmental assessment process. So our project, particularly Springpole, has some, unique element of disbelievers because the deposit sits under the bay of the lake, and that's all obviously dealt with in our engineering plans. I think it's all dealt with through our environmental plans, and it's something that has been done a number of times in Canada. So yeah, I think from that perspective, there is still a portion of the population that is going to be wait and see until you actually have your permits.
Right. Okay.
And, that's fine.
So and that's
but
fine.
I think,
as shared, permits really, really important part of this. You need to convince them that you're going to get them or that you've got them, and that's fine. Yeah. So, and like I say, it's been done before. This is not new technology we're dealing with. Let's come to the bit which really kind of sort of cement from the boys out is, how do you get funded? Who's going to fund you? You've been down at BMO. That's where the big boys go and meet. Who have you been talking to? What's the feedback been from them?
Well, I think, our calendar at BMO was probably 2/3 catching up with, larger producers in the industry. And I would say from that side, a more robust discussion than we've seen in a long time. And I think, considering the last BMO was virtual, the one before that was right on the cusp of the pandemic. I think that bigger companies are now very seriously looking at their development pipelines and recognizing that if you're looking 5 years out, there's kind of not much that fits into that next stage of development. And we've got one of the bigger projects in a tier 1 jurisdiction. So, big and robust and able to grow, which is another point we'll come to. Our other investors there, or other meeting, were with investors. And I think, we have a kind of small core group of institutional investors. And that's, but we certainly appreciate all of their support. But it's a pretty small group. I think we're still largely institutionally unheld. But as we demonstrate that these catalysts are coming over the next 2 years, we get into the environmental assessment process and get kind of line of sight on the end of that process, then it becomes a little bit more investable for the mainstream. So lots of people starting to look because it's big and it's robust and we have amazing leverage to a higher gold price. And if you are a believer in a higher gold price for Springpole, every $100 is another $150 million of after-tax NPV, $250 million of pre-tax NPV. So that is big leverage to where we are, sitting today, $300 in gold price higher than when we did the study a couple of years or last year.
Right. But what I'm trying to get at is, what was the feedback from the the industry guys? I said, what are they looking? They can see your numbers and go, okay, 335,000 ounces a year. Yes, please. I'll have a piece of that with the margins that you're talking about, with the terms you're talking about. Yeah, that sounds interesting to me. Are they concerned about the CapEx number at all? If they're not, maybe the market shouldn't be. So is that a concern? Have you engineered it right?
Yeah, listen, I think everyone is talking about cost inflation. And, for the smaller market cap of the companies that we've been talking to, where $1 billion would be, a larger bite, I think they will be more predisposed to wait to see how it evolves and get fresh numbers from engineering. And from the feasibility study process, which we've kicked off. For the larger gold companies in the world that are generating, billions of dollars of free cash flow every year, this is kind of a chip shot. And so for us, again, one of the things we're probably most concerned about is you have someone who recognizes that and decides to act on it before everyone is ready. That's where I think if there's one thing that kind of keeps me up at night these days, when we're trading at 0.06 times our net asset value, that's part of it. But I think it really does open up that discussion, which is far more fruitful, around strategic partnerships and around, maybe strategic investor participation.
Well, let's have that conversation, because there's no way you want someone coming in here and giving you a 25-30% premium at today's price. Okay, that would just suck. Because you've done a lot of heavy lifting and there's a lot of upside to be had, but at today's prices that doesn't work for you. So one, how do you make yourself defensible yet attractive at the same time? What are the things that you have to expedite to get into this feasibility study so that the market can value you or appreciate you differently from what they are now. You're 210 million market cap today. It's
of which about 120 million of that value is cash in our portfolio assets. Not even the main assets are moving forward.
Right.
So listen, spent 20 years as a corporate finance professional and 5 years as a private equity investor. Have helped a lot of companies at this stage, and I will tell you, the only thing that ever saves the day in this stage is making sure that you have more than one party who's up to speed on the project and aware, so that if someone decides to move proactively, then you have other people, and you can at least achieve some modicum of a market price because of competition. But until then, I think there's still, given where we are, a number of people who would be interested to have exposure, but I don't think necessarily want to move on the whole thing today. And I'll tell you, one of the main reasons is we're just at the very early stages of packaging and starting to be able to get active on the regional exploration. And that's one of the biggest things that I think has changed people's perceptions. And it's not a surprise because we've been working on this for a year, but that combined with sort of the success and outcome with Great Bear has given people a real sense of renewed interest in this Birch-Uchi greenstone belt, which we, slowly and quietly picked up the dominant position in over the course of the last year. And it wasn't easy. It was 10 deals with, other junior companies and prospectors to kind of piece together the land package. And there's still lots of interesting stuff happening outside of us, but this belt and that district scale exploration is the thing that the bigger companies need to kind of check the box on top of 5 million ounce equivalent resource.
Right. Okay. I want to kind of compartmentalize this because in my head I kind of want to walk away and go, I can put some money on this thing, right? So with the flag Springpole project, the feasibility study is being worked on now. When does that actually get delivered? What's it cost? How long is it going to take?
Feasibility, our goal is to have all of the engineering done this year. Whether that manifests itself in a study immediately after, the timing of the study to a degree gets a little bit set by the timing of the environmental assessment process. Right. Because if you're going to go through financing, if we put it out now or put it out at the end of this year, you probably have to do a study update, 6 to 9 months later, not the end of the world. So we're kind of weighing that alternative. And the feasibility or the environmental assessment, as I said, we're rounding the corner on finishing, the draft document, which we will then submit to regulators and to our communities, just to have the first complete snapshot with all of the technical data behind it so people can understand exactly what we're going to want to do. And we get real comments and feedback that we can incorporate before we submit a final. So that's what our team, who spent 6.5 years taking the Hard Rock project from scoping study to construction permits, same process they went through with the draft, and they found it very helpful because you incorporate all of that feedback upfront before, you're formally in to the final approval process. And we still need to get, there's a lot of parts of very important feedback, particularly from our Indigenous communities, that we really need to get around traditional knowledge and traditional land use. And, I think that's some very important work that some of our communities are moving forward right now. And so, obviously we want to incorporate that, but it's getting all of the ministries paying attention and doing the work on the technical and the fundamentals, just so, we can address any of those concerns moving forward. But what that means is that by the end of the year, we're going to know if there are showstoppers in that process. And, that's one of the things you really like about this process is that it does, it's not just a black box binary process. It's all, open and transparent, and everyone will be able to see everything that's there. But it means that we're going to have a lot of catalysts along the way, not just waiting for a binary decision at the end.
Right. So what are the things you're measuring that could be showstoppers or not? But I'm more interested in First Nations issues. Got to be number one.
Well, I mean, when we talk about issues with our Indigenous communities, I don't see it as issues. It's that we need to advance the discussions with our communities around how we align our interests, right? And there's a lot of avenues for alignment of interest around this project, not just employment and contracting opportunities and all those kind of base things. There's a lot of other significant potential investment leveraging the infrastructure of the project, be that roads. So a road up to the community of Cat Lake has been one of the things the community's been looking for a long time. We've been helping with the study of that road as part of our engineering process. Renewable power opportunities, which we've scoped out. We're building a big transmission line. There's no reason why power can't go both ways on that transmission line. So we're starting to collect more data and have some scoping studies. But those are things that I think could be great partnership projects with our communities. We still need to go through the discussions with our communities about, really once they see the plan, what's important, how do we mitigate any potential impacts, and hopefully, from our perspective, how do we work together moving forward?
Right. Okay.
So that's that, and as we go along that process, there are going to be a number of milestones and agreements that we're going to be able to hopefully, come to agreement on and announce over the course of the next couple of years, just to define how we're moving forward. So, we're very, very much looking forward to that engagement and consultation as we go through this.
Right, and then obviously engineering. Is it re-engineering? I think you described it as earlier. Is that because anything fundamental is changing, or that you're looking to expand the scope of what you're doing, or just improve the efficiencies? I mean, what exactly is the re-engineering of this?
So there's not all that much re-engineering, but it was over the course of the last year, we've done some optimization and trade-off studies. And one of the biggest ones that came out of that was, we think, a much better and longer-term environmental solution where we concentrate the sulfur in the process anyway, but if we can keep all of that concentrated sulfur in a separate tailing stream, you can manage it far better over the life of the mine by keeping it subaqueous so it doesn't, have the potential to generate acid. With a sulfide open pit ore body, it's always something that you have to deal with. So a lot of the early stages of feasibility is around the engineering of the kind of core environmental aspects of it, which we've done, as I say, done at pre-feasibility level. And so this is really finalizing some data collection now, but we're going to have the data set at feasibility level here shortly. So that's been a part of it. Mine plan is largely going to stay the same. It's the ore body. You remember kind of what it looks like. It's a big blob, and there's kind of one way that it wants to be mined. But we're looking at other things like how do we reduce or potentially eliminate diesel usage at the site. So what's the opportunity for electric assist haul trucks and things of that nature? Just that have far-reaching impacts beyond just, I think, risk mitigation of oil price, which is something that's obviously topical today, but also, the carbon footprint, how are we engineering the best project that we can environmentally? So let's trade-off studies like that are going on. But the core part of the process is largely what we had scoped before, just taking it to a more detailed process of engineering.
Okay, so come back to the original base of the question, was I'm trying to understand the timing for all of this. I can understand why the market gets bored with projects at certain stages, because it's kind of a lot of admin being done, stuff that you need to do it the right way, you need to improve efficiencies, you're spending money, but there's nothing meaningful moving forward. It's just a question of you working out how you actually extract, in your case, gold efficiently. So can you give the markets, I know you said it's difficult, but can you give a range in terms of, are we talking this year, are we talking next year? I mean, what's the time?
Yeah, so we talk about this all the time. Submitting the environmental assessment document, our goal is to have that draft ready for everyone to look at, probably early in Q2. Once we submit that, we should expect to receive comments back, depending on the ministry that we're getting them back from, between 3 and 6 months. And then it's depending what those comments are, that's where there's a little bit of a question as to how much more work you need to do in changing project scope, going back to, probably some feasibility level engineering if there are major changes. But a big part of the environmental assessment is just letting everyone understand what trade-off work you have done and, how and why you've made the decisions you have around the project. So, what all that means is, our goal is in the beginning of next year. Again, depending on how long it takes to incorporate any comments that we would have, but near the beginning of next year, we can submit that final environmental assessment document that has far more defined timeframes on it. And if everyone has reviewed a draft and we've incorporated a bunch of those concerns, it should move, we think, reasonably smoothly through that final process, which is about a 12-month process. So that would leave us with environmental assessments, end of 2023, beginning of 2024. Now, is there possibility for slippage on those timeframes? Yes, it's a regulatory process. So we wouldn't be the first people that would happen to. But I think we mitigate a bunch of that risk through the draft process that we're going through.
Okay, understood. So that's the kind of potential time frame. So that's important for people to know. They because it's a big project. The upside is huge. That's good, but you're kind of at the admin phase of that. So let's talk about some of this blue sky. Let's talk about some of the either whether it be, are you going to do, sorry, you don't, I mean, this is a huge project. You don't need to do any more expansion drilling here, do you? You're going to focus on exploration?
Yeah, no, you don't have to do expansion drilling. The ore body itself, where it is well defined. 180,000 meters into it, and it's a very continuous ore body. So, we kind of understand where it is and what's at the edges. So all the work that we're doing now, some of the drilling that we're doing now is in support of feasibility. So it's geotechnical drilling, it's waste rock characterization, hydrogeology,
right,
and the footings of the cofferdams predominantly. So moving into the rest of the year, we've now kind of got our footprint on this district. And we brought on a new VP exploration in October, James Maxwell, who is an outstanding guy.
Good guy.
And I think we are very, very much, taking our geologic understanding, not just of Springpole, but sort of how that then translates into the rest of the district to a whole new level. But as James has quite rightly pointed out, regional scale exploration, you can waste a lot of money if you don't go about it in a sensible and systematic way. And so that starts with a big regional geophysical program, which, we're pretty excited to get to. We have drill permits on a handful of sites in our mineral tenure. Some of the ones that we'd optioned into had permits. So it's just kind of prioritizing those targets. But you really want to have the geophysics in place so you can, really understand and more effectively go and target. And the rest of this year is going to be a lot of boots on the ground, hammers and samples geology to really work up this district. But that is where I think at the end of, a year or two, we're able then to present to, other potential partners down the track, I think a really interesting advanced stage exploration pipeline in a greenstone belt that's seen, a very small fraction of the exploration work that the Red Lake camp is, but has all of that kind of prospectivity.
Okay, so you're going to continue the model that you've employed with Orteco and Big Ridge. You would look to get projects to either advanced exploration stage and then have a conversation with companies like that to go and get them to spend more money in the ground and then take a piece of that. We're taking royalties or a bit of equity. Is that the plan?
Yeah, no, I don't think you do that with the stuff in the Bertucci, right? The value of that is everything that you find. The value of it is its proximity to what we aspire to have as a permitted 30,000 ton per day mill within, 20 kilometers. So this is essentially, defining the size of the prize for, a generation or two of mining potential in the district. some of which you find things that are higher grade, then that just goes into earlier mill feed. Yeah, there's a lot you need to sort out, but this traditionally has been a high grade gold camp, right? Springpole is quite an anomaly in terms of the type of deposit it is. But one of the projects that we're earning into just to the north of Springpole, 20,000 meters drilled into it by Placer Dome in the 90s, well-defined, very high-grade structure, and hasn't seen a drill hole below 250 meters, which anyone who's is a student of Red Lake geology knows that the real mines get found quite a bit deeper than that. So, but surface expressions of ounce plus material.
But how do you get the balance, Dan? How do you get the balance between developing a district is a huge expense and time and allocation. So bringing partners in to do that, or working with other people to do that and get them to share the cost of that in the balance sheet is one option for you. You've got the mill. Hopefully the ability to kind of fill the mill with other people's ore and do tolling agreements. Fantastic. I'm trying to get a sense of, whilst you're kind of advancing Springpole along, you could develop the district and all the kind of blue sky, that you hope is there. That there's kind of almost layers of growth stories in here where you can either monetize some in the short term. You've got obviously, you say you've got cash. Obviously, you've got equities in. With Treasury, you've got the agreements with Oteka and Big Ridge. I can sort of see how you're starting to do those layering of different types of value creation and cash generative creation opportunities for your shareholders. But have you kind of got a sort of plan of near term to medium term to long term in terms of how you develop the district, or is it a case of, well, let's just go and do a few rock samples or surface samples, and we'll kind of plan it as we go along? I mean, how do you map that out?
Well, I think it's how you kind of systematically understand the opportunity and screen and target it.
Perfect.
Right? And you're not going to necessarily go and drill all of your targets right at once. You kind of have to go through the process of working those targets up. But one of the other things that's amazing that we have with Springpole and with some of the other projects that we've picked up that have some kind of more advanced work on them is, as you bring that whole data set into a modern era, you're going to have a bunch of analogs to be able to sort of sort with and sort through. So you're going to know what the signature of high-grade gold looks like in the geophysics. You're going to know what the signature of these big, porphyries look like in the geophysics. So I think it gives you a real advantage to that. But that working up the pipeline is more of a time-intensive than dollar-intensive process until you get to the point of drilling it. And then I think you can have a different discussion once you have some drill success and say we either discover another Springpole, or you discover something that's Great Bear-esque, or you discover something that's Red Lake Mine-esque, all of which are kind of the targets that we have in this camp. I think the moment that you demonstrate that 5 million ounces equivalent is your starting point and not your end point, and that you are going to have a generation of exploration opportunity around you, with, a couple of years down the track, permitted milling capacity that's about 5 times the current milling capacity in the entire Red Lake camp. Like, I think that really does change the perspective from larger potential.
Make it more real for me, Dan. Make it more real for me, because that's a kind of nice generic approach to any mining operation, right? I want to talk about you and what you're going to do. You got some cash. So how much cash have you got? What's the mixture of cash and equities?
About 30 million of cash,
right,
and then call it 90 million on the balance of the current value of the balance of our portfolio.
Brilliant. So with the 30 million, what's the optimal way to spend that? You got to obviously get the feasibility done. That's going to cost what?
Yep. Feasibility, with a bunch of the feasibility work that we were doing, will be, call it somewhere in the 5 to 10 range. So by the time it's all done.
No problemo. Okay, all good. So the optimal way to spend the balance of that, obviously a little bit of G&A going on, but what are you doing in terms of districts can suck up a lot of money if you don't come at them the right way? Yeah, they're a liability in a way, right? So, have you got targets today that you're going after, or is it a case with this early geophysics stage where you've got to go through that process? It is a time-intensive process, not a cost-intensive process, and there's no kind of shortcutting that. Because I'm trying to say, how do you create some near-term blue sky value in the minds of the market? And what's the conversations that you're having about delivering that?
So the other important part that we're missing is, and I think the most important part, is advancing on the environmental assessment and work with our community, right? And so that is, I think, the real priority and the major de-risking here. So that advances, over and is, well budgeted over the course of the next couple of years as we go through there. And in terms of the rest of it, no, we have 5 permitted kind of drill targets that we could get to. We would like, you kind of do some of those things in parallel. You don't just wait. I think we have the opportunity, pending on exploration permitting, pending on, agreements with our communities and an understanding of exploration and, what our communities would like to see with that. And, the results of the bigger sort of regional work. But we do have things that we can get to drill on this year that we have permits on. So all in all, you put that budget, somewhere, it probably starts at 5 and can probably, on success increase from there.
Right. So that's already a better story for me. You've got this massive project sitting, being advanced, fully funded to get through to feasibility. You're working through an EIS with all the kind of social responsibility stuff you need to the First Nations. That's a great story in itself. But you've got targets that are you're permitted on and you budgeted on. Because most companies I talk to are cash constrained. They know what they want to do, they just can't do it.
Yep.
And I just wanted to get to that hardcore piece of information, which was we can keep drilling, we can make more discoveries. That's exciting whilst we're doing all of this stuff off on the side. But by the way, which makes us a top 5 company or top 5 producer in Canada. It's all good. Yeah. But this makes it a step beyond. So that's really good. That's really good.
No, I think that's right. And I think the moment that you get to that, you demonstrate discovery. You demonstrate there are other potentials in this district, and we're starting to have a lot of people looking at this district more broadly. Barrick's picked up a huge land package to our southern flank. You've obviously had Kinross with Great Bear, and everything that's going to come on the back of that, and in this district, kind of pushing east. I think the presence of another discovery really fundamentally changes this from the perception that Springpole was always kind of what you see is what you get, to now this is a bona fide district scale exploration opportunity anchored by a super robust, very advanced stage project.
Absolutely right. Let's and I agree with you. You just got to make that discovery. They're not easy to do, but if you make one, it's a big deal. Okay, so can we talk about the royalties? Can you give me some update on where you are with all of that? Because again, that's another layer on top.
Yeah, no, exactly. And that 120 that we talk about of cash in our portfolio value doesn't include the value of our royalties, which we think is significant. So 21 royalties. Amongst those, the biggest ones would be the ones associated with our partnership portfolio. So royalty on Pickle Crow, which, if you follow Teco, our partners there are doing an amazing job. They've doubled the size of the resource, and it's really shaping up now as one of Canada's kind of premier, greater than 2 million ounce, high grade gold projects with just an unbelievable infrastructure around it. So that's going very well. We've got Hope Brook, where they've got drills turning, first real drilling campaign there since the mid 2010s decade, sort of anxious to see kind of what the results are there. And Goldlund, where obviously Treasury has been advancing the Goldlund and Goliath resource. But the most important thing about those 3 royalties is our partners combined last year did about 120,000 meters of drilling. Like, that's a big program, right? If that was in one company, that, it'd be one of the bigger programs in Canada. So those resources are getting better. So we're not in a big hurry unless someone also recognizes that the resources are getting better. Great exposure to discovery. And they're also being advanced to the point where they're going from being a royalty valued on a per ounce in the ground basis to a royalty valued on, a mine plan in a pre-feasibility study, which, at Treasury, which we're going to see, we're going to see that later this year. So I think that also helps. They're just becoming more advanced project.
And then you're under no pressure to sell those royalties or spin those royalties out. Well, maybe it's not a case of pressure for spinning out. There'll be optionality for you, but because the cash position and the equity position, you don't feel that you need to sell these royalties on because they're in good hands at the moment in the sense of the partners are good, right? Okay.
I think from one perspective, if you could find a partner for whom these royalties would be a significant piece, and you then have a mark that you can show to people, I can put it on the other side of our slide in our investor deck, which is here's kind of the undeniable market look through value of these things, which is kind of what we have with our project interests and our equity holdings. Then that's fine, and if it's meaningful enough to that group, then you see the value increase as you get more of that drilling coming in and you see the resource upgrades and people are excited about the resource growth there. So I think with all of those, it's a pretty strategic portfolio, and in the right hands, it could be worth, I think, a lot. And you'd also benefit then from the growth in value that it could be a part of a bigger portfolio. So something like that, I think, would make more sense rather than selling it today for X amount of cash, because I just don't think you're going to get the real longer term fundamental value out of that, and we're not in a big hurry for it.
Right, I think that's the most important part of that equation. So just on, I think just one last question on Springpole. You've had some conversations at BMO. People understand that you're here. You're not in a position at the moment without permits in hand to start having conversations around understanding what debt you could get on this, because it's not something you can fix in right now until the feasibility study is in place, presumably, right? Is that true?
No, you can't. But you can start having the discussions around the parameters and around sort of understanding what the capacities are in the project financing market right now. Yeah. So we've been talking with a few advisors about that. We haven't retained a project financing advisor, but I suspect that's something that we would do as you move toward the feasibility getting done, because that is a long lead time process as well. You need an independent engineer that kind of walks through the feasibility study with your team, but you kind of want that mostly finished. So, you're not necessarily, you kind of have the cake baked at the time that you bring them in to see how they think it's going to taste. So that process, I think, kind of kicks off later this year, gets serious in earnest in kind of the middle of, beginning to middle of next year, where, you also want to time it such that you can maintain a degree of momentum. So you really do sort of want to have the line of sight on the environmental assessment process and the finishing of the environmental assessment process, because everyone's going to need to see that, obviously, before you get to a point of real commitment. But you can move a lot of people down the path in that way. So be that, kind of consortiums of banks, as we've seen in a few recent project financings, lots of interest from a number of the other, mining financing providers. There's not that many people who could write $500 million, project financing checks, but they exist. And, we certainly make sure the project's on everyone's radar at an early stage. And at the right time, people will roll up their sleeves and do the work on it. I think it's not quite yet, but it's something that, I think also just helps frame that go forward strategy in the same way that talking with the industry helps frame that go forward strategy around, maybe it's a JV, maybe it's a partnership with an industry player that you finance this project on. I mean, the quick math is your earnings usually happen at, 0.7 to 1 times your NAV. So if someone was going to earn into 50% of the project, that's more than the equity we would require as part of our build. So then you're kind of in a potentially quasi carried interest position to get you to the finish line, which there would be a lot worse things than owning half of a 335,000 ounce a year producer, right? That would have value that would be significantly in excess of where we're seeing in the market today. So lots of different, I think, optionality as we go down that path, but you need to have some of the fundamental stuff in place.
Yeah. Structured finance, my favorite bit of all of this. And I got one last question. It was sent in by I presume one of your shareholders, certainly one of your fans. It's around the sort of total gold and silver in the ground for all of the projects. I mean, I guess it comes back to how many projects you got 43101 compliant reports on?
Well, the number that we report is a little bit in excess of 8 million ounces equivalent.
Right.
We have 43101 reports on Springpole. There's one on Gold Lund Goliath, Cameron, our Quebec projects, which is actually 3 separate projects with 3 separate technical reports between Duparquet, Pitt, and Duquesne. And we have 43101 on Hope Brook as well. So, they're all underpinned by solid reports.
Okay. I'll leave it there. Dan, good to see you. Good to catch up with you. Glad to hear it was busy down at BMO down in Miami. Hope you got some sunshine down there. But now get your feet safely back under your desk, back at the office. So
I hope sunshine was the only thing I got while I was down there. The state of Florida lives in a post-COVID world. So anyway, no, it's all good. And always, as always, a pleasure to chat, and we'll look forward to the next opportunity, hopefully maybe in person later this year.
Good, man. Speak soon.
All right. Cheers.